Resume recording. Perfect. Everything is up now. I hope my internet won't crash. I'm gonna close this and we're going to do gold today. Okay. So this is where I want to start. The most important part, okay, guys, is my plan. Something that made me successful. Okay. And it's pretty much very simple plan. Okay. So how I find things is that I understand that now trading is 80% psychology, 10% execution, how you will execute trades, okay? And 10% of your analysis, how you will think where the market goes and determine your bias, okay? Then the second thing I want to talk about, very important, is this part, okay? Is never gamble in the market, okay? The more you gamble, it's like going to casino trying to lose all of your money that you came with, okay? Never overtrade. If you had a losing day or one losing trade, you got stopped or whatever, close your charts, go outside, take a breeze, and come back the next day, reanalyze, okay? Because if you overtrade, it's like revenge trading. You lost trade and you try to gain this money back, but then market will always play against you, okay? Third thing that I want to talk about is never over leverage, okay? So if you have a 1K account, you cannot drop at 2 lots. No, that's impossible, okay? So try to risk between 3 to 10% of your account, okay? This is the most important thing, is to risk the less you can of your account, because if you lose the trade, you have more opportunities to go in other trades or another day, you know? So never risk more than 10% of your account, never over leverage. So if I see, let's say your account is 1 to 500 leverage, okay? And I see that your margin level, your margin percentage is below 500%, that's it. You're over leveraging right there, okay? So your margin level has to be at least 500% and over when you're trading 1 to 500, okay? The leverage. And another thing I want to talk about is try to find 3 to 4 entries per week, okay? From 2 to 3 pairs. So let's say you analyzed and you prepared your week, okay? And you know that there will be 2 or 3 opportunities in 2 to 3 pairs between, okay? Well, in that 2 to 3 pairs, okay, try to find between 3. Can you mute your mic, bro?
Yeah.
Yeah, man, you're clear, man. Go ahead, man.
Okay, I did. So try to find between 3 to 4 entries per week, okay? 3 to 4 good entries, not between ranges, somewhere here, someone here. No, in the zones, strong zones, like somewhere here or somewhere here, somewhere here, somewhere here, in the strong zone. That's where you should execute your trades. Never execute between those zones, like between support, between supply and demand, because if you try trade between supply and demand, well, that's where there's more chances of getting stopped, okay? And always treat trading like businessman, okay? In the business, you don't want to lose money. You want to win, and make more money. So trading is basically like business, okay? Keep this in the head. Next thing I want to talk about is my plan, how I found my success, okay? I'm an intraday trader. Q teaches you to become a scalper, become intraday, or a swing trader, okay? But all those things, it's differently. So you will if you're a scalper, you will execute from M15 and you will take between 10 to 20 pips. If you're intraday, you will execute M30, you'll look at H1, H4, and you'll go between 30 to 40 pips, sometimes more if the market gives you the opportunity. Then if you're a swing trader, you'll execute your trades from H4, H1, and you will look at daily, weekly levels, and you'll go for more than 100 pips, okay? I don't have patience. I've traded the swing once, and I have right now a swing that is a runner. I call those runners, where I execute my trade for 30 to 40 pips. Then sometimes I'll get 40 to 60 pips, and then I'll have a small lot that is in profit, and it will run for as far as it can go. I'll show you after the swing that I have right now, and I've been holding for a month, and I call this extra money because I've been holding just for fun, and it's a small runner. It's not trade where I've been concentrating only on 400, 500 pips. Now I was concentrating between 30 and 40 pips as an intraday trader. Okay, so what I want to talk here about is after 10 pips. Okay, always tight your stop loss. Okay, protect your capital. Okay, here's always protect the capital. So after 10 pips, move your stop loss, tight it. Okay, after 20 pips being in profit, stop loss at break even, because if the trade reverses, you're protecting your capital, and it's like business. You're protecting your money. You're protecting your how to say, like so you're protecting everything. You're just protecting the money. Okay, you're protecting everything, and it's the most important part. And after 30 pips, put your stop loss in profit, because once again, if the trade reverses, okay, well, it's okay, man. You didn't lose money. You didn't lose your capital. Okay, so your balance is at same, man. And my trick that I give to people is at first take profit, take partials, man. Always take money from a winning trade. Okay, and never turn your winning trade into losing trade. Okay, it's the most important part. Never turn a winning trade into losing trade, and take partials along the way. I'm an intraday trader. Okay, I take profit at 30 pips. If I see I can get 100, I don't care. 30 pips, I'm happy. 50%, 70% of my order will be closed. Okay, and then I put my stop loss in profit. Okay, after 30 pips, stop loss in profit, and I can go do whatever I want, take care of my business or anything, or I can go gym, or I can go meditate, cook, whatever. And if the trade reverses, well, I already took the money I wanted from the market, which is 30 pips. And I don't look in money base. I always look in pips. It's the most important part. Okay, so I take 30 pips, and if the trade reverses, okay, sure, man, I'll come back another day and I'll grab another 30 or 40 pips from the market. Okay, and if I see, okay, the trade is going, there's a lot of volatility in New York or London session, okay, and the trade is going further and is breaking zones, well, I'll take another 50% from my order at between 40 and 60 pips, and I'll always have my small order, which I call a runner. And if it gets 100 pips, okay, that's extra money, stop loss in profit, sure, man, okay, free money, I call it. Okay, this is the most important part. Okay, always protect your capital. After 10 pips being in profit, tight your stop loss. Okay, and after 20 pips, stop loss break even, man. Always protect your money, most important part. Okay, now the second thing I'll go through is gold analysis. Okay, so I hope everyone took this in consideration and will apply it. This is where I found my success. Okay, I found my success by building my plan this way. Okay, some people will see 30, 40 pips and they won't even tie their stop loss or put their stop loss in profit, and they will get too greedy. They won't take money from the market. Okay, and the trade reverses and it gets stopped and they lose money. Okay, so keep your psychology very strong and never go against your plan, man. Sometimes sometimes market goes even further, and I don't care. No emotions, man. No emotions in the market. It's the most important part. Okay, so let's go. I want to talk now about the zones. Okay, having zones, I call them kill zones. Okay, kill zones are they're phenomenal. Okay, if you don't have those zones, don't execute any trades between those zones, because that's where you will start lose money. Okay, execute trades at the zones. Okay, this zone, this zone, this zone. You see, look, every time it taps here, it reverses. Okay, and I'll tell something, market has more chances of bouncing from that zone than breaking it. Okay, in order to break that zone, needs a good news, needs always good news. Okay, and I'll show you a small trick right here. Okay, why gold dropped? Simple. Gold, you got to understand what is gold. Gold is a safe haven for investors. So anything bad happening in the world, investors want to invest in gold because gold is a safe haven, and currency will lose their money. Okay, their it will lose like the value of dollar, and gold will gain in value. Gold is depreciate. It appreciates. Okay, so gold will always win in value because it's a precious metal. Okay, you will never see gold go back to $500. Impossible, no more. Okay, so gold will always win in value, and that's why gold been bullish for so long, because of those trade wars. But why gold dropped last week? Simple. Okay, I'm gonna give you a small trick if you want to become good at fundamentals. Open your Forex Factory. Okay, go to the latest news here. Okay, and go down. Just read the red packets. U.S. President Trump says he's not agreed to tariff. Okay, don't care. Let's go down here. Let's go. Oh, 7 November, last week, Friday or Thursday. Okay, U.S. is very, very optimistic about reaching a trade deal with China. Okay, better economy. Okay, everything is doing good. Less trade war, so we see a good potential deal with China. Gold drop, man. That's it. Simple. Why gold drop? We're looking at a trade deal with China. Let's go down here. Look, another one. White House plan to roll back China tariffs, faces fierce internal opposition. Okay, let's go. US says that phase 1 China trade deal will include a rollback in tariffs. Okay, you want to know more? Click on it. Okay, there's usually there's links. Okay, go read, man. Go read. Go try to understand what's happening in the economy with trade wars. That's how you'll become good at gold or oil, even, or GJ. Let's talk about Brexit. You know, I know what's happening with Brexit because I watch the debates in the House of Commons. You know, it's simple. I go watch and I want to know what's happening with Brexit. Are they going to have a deal someday, or are they going to extend once again, like for the past 2 years? You want to know what's happening. Why GJ is bullish? Why GJ is bearish? You know, like you want to understand what's happening in their economy. Don't forget, okay, the dollar or the currency depends a lot on what's happening in the economy. Is the economy good? Is the political situation is good or bad? You know, you want to be curious, you know. And second thing, let's go into technicals now. Before going into price action, I want to go in technicals. Okay, have your zones marked. Okay, I'll take here for fun. Let me do this. Let me do this. Let me do this. Okay, I sent this to my friend, and this is the oil trade. Okay, entry 52, price 57. I have over 500 pips here. Okay, let's go on oil. Let's go have fun a little bit on oil. I don't trade a lot, but this trade was Did I disconnect? Someone can hear me?
Yeah, looks like that happened again.
Okay, can you hear me?
Yeah, you're back now.
Oh, yeah, he's back. All right.
I'm back. So did you see my oil trade? Okay. So this is my oil trade. Okay. If you look, I'm on daily time frame. It's one of my favorite, I would say. Okay, but I have no preference in time frames. Okay. So look, 52 price at 57. I took profits here. Okay, I had like a 2 lot on oil. I took profits here. This is my runner, 0.50. And look, it's free money. Like I said, free money, man. Stop loss in profit is going further up. Okay, sure. Where I'll take my profit, all my profit, I think it's going to be at 59 here. I see the zone here. I see the zone here. zone here, zone here. I'm going to take, okay, let's go on oil now. Let's go have fun on oil, okay? So why I took this trade? Simple, okay? Like I said, market has more chance bouncing from that zone, okay? The zone, than breaking it, okay? And especially on a weekly time frame, which is a very strong time frame, okay? Then I break down on daily, okay? So I had double bottom here, okay? We bounce back up. So I had another touch here, we bounce back to this zone. Then I had another bounce here to that zone. Bounce here to the zone, we tried to break further up, kind of a fake out on weekly, daily, we came back to the zone, and then okay, look here, we came back to the zone. We literally came back. Oh no, this what happened is the Saudi Arabia, the drones that were filed missiles, okay? So that's why the price jumped further up, but overall we were bearish, so we touched the zone, that's why we dropped instead of going further up. Look, okay, simple. We're on the daily time frame, we bounce here once, we bounce here twice, here we had some kind of rejection. What do you think going to happen here? Look, we all those weeks, you know, Q talks to you about those weeks, you know. Look, another week. Like my entry was at 52. Like I had the sniper entry on oil. Why? It's simple. Like
So it's pretty much exhausted, right?
exactly, it's exhausted. And like I said, there's more chances of bouncing from that zones and breaking it. Always, there's more chances bouncing from the zones than breaking it. In order to break a zone, we need a lot of liquidity, okay? Look, 1, 2, okay? We're on daily time frame, plus we have this kind of trend line, 1 touch, 2 touch, then we're respecting this, okay? So let's go on H4 now. Never forget where's your zone at, okay? Look, this zone is marked. Yeah, on the daily we came down, it's a fake out. We came down, it's a fake out. We went back. This is once again, it's exhausted going back up in the zone, and then we're playing here. Okay, always know where you're at higher time frames. Always Q always says that. Okay, always know where you're at higher time frames. Okay, so I had this
Exactly way I used to trade, like for real, exact way I used to trade. Probably about a year ago. And don't get me wrong, you'll win a hell of a lot of money out of it.
Damn right. Okay, so then you come here
every time.
Let's do other zones. Okay, let's do come here. Okay, and we marked our zones, our H4 zones. Okay, our strong H4 zones. So we're bouncing from here. But this here is a double bottom on the daily. But we're bouncing from the zone to the zone to the zone to the zone. And look what happened. We had like some kind of news. We rejected exactly the same zone that we rejected previously. So basically, this is a double bottom. Okay. I got my entry at 52, and I know we're going back up. And like I said, stop loss, have a nice, smart stop loss. Okay. Below, let's say below some kind of those wicks, okay? Because actually we rejected. So I put my stop loss here, but we went back up so fast, man, that my stop loss went at break even faster than you expected, okay? Because I will never turn my my winning trade into losing trade. Then,
so you would pretty much enter once it goes back over that trend line and retests that area?
Exactly. You know, so we had like a double bottom entry, man. That's it. Why trying to sell when you know it's a strong zone and there's a chances of bouncing more than breaking it? Okay, I'll give you a trick. Buy at support, sell at resistance. Okay, so when you see a strong resistance, don't try to buy and because you'll think it will break. No. Sell. There's more chances that will break that zone instead of there's more chance that will bounce from that zone than breaking it. Okay, it's something that I learned and it's very basic. Look how much we bounce once, twice, and I call this third lucky charm. Eventually we'll have to break it, right? So we broke it.
The market always does like a really long wick before it changes direction. Like you see at the bottom, your very last zone, Every time it always does that. It'll continuously always do a long wick. So don't get faked out with like a small one. Wait for the long wick to happen, but you'll see it on a smaller time frame. It's like a huge wick, and then it reverses going the other direction. If you stay on the 15, you'll see a lot of stuff happening.
Exactly. You're right, man. Okay. And look, I took my profit, like I said, first take profit 30, 40 pips. Okay. I had a nice entry because I was there at the New York session where news came out, where it created another kind of liquidity grab in order to push back up, and I knew it would reject another time, or I was waiting for my entry. I had patience, First take profit 40 pips. Then I had another take profit. I think it was 70 pips because I knew it was very bullish, right? And then my runner that is flying and is flying, man. Look, I'm here at my entry. I'm here at, okay. And this is just for fun. I'm keeping a runner. And when I will close, I'll go on the daily, okay. And I want to mark my zone. Look, it's breaking 200 EMA. Okay, I want to mark my zone. Look here, we have support. This is support, resistance, some kind of resistance, and then we have resistance here where we played around. Okay, I think I'll take my profit somewhere here, man. Make sense? Once it's
okay.
8:58,
So,
I'll take my.
I don't mean to cut you off, but too much. But just for the people that's on the group, what would you say, and that's to everybody to respond on this one, what would you say that is your strongest pursuit? Because it becomes, as a trader, you have to know your style. Like for me, I could trade long of higher time frames and I'm cool with that, but I've learned to have a lot more success with scalping. I'm a better scalper than I am a long trader. And for whatever reason, that's the stuff that makes me the most money. It's just scalping. So people look at me like, oh man, you're only in there for 5 pips. I'm like, yeah, 5 pips,
Nah.
10 times out the day.
Bro, I think when it comes to that, it has to do with the amount of time you're able to stay focused.
I can stay focused really quick, in and out, and I'll do it 10 times out of one day. So that 5 pips turned into a 50 pip trade, and it's quick.
Okay, so I'll tell you a thing, okay? Like I said, this is my plan. This is something that I found that made me successful, okay? And knowing that every time I reach 30, 40 pips, I take my profit 50% to 70% of my trade, and I put my stop loss in profit. That's it. Always protect your capital. That's it. This is what made me successful. I have a friend that they're scalpers. They go for 10, 15 pips. I'll go join them and have fun and scalp for fun. Okay, I can do that because I became good at price action, knowing where the support forms on M15 30-minute. Then I know that eventually the H1 will is bearish and it will flip to bullish, and buy once it's bearish, and once the H1 goes bullish, I know, okay, I got 20 pips, I'll take profit. That's scalping, yes, sure. But for me, scalping, it's too much, Well, if I see there I can get only 20 pips and I got an entry, okay, I'll take 20 pips, I'll close, and I got my profit. Don't be too greedy in the market. Once you become too greedy and have emotions and you don't protect your capital, you'll make winning trades turn into losing trades. And once you do that, that's it, man. That's it. That's where your psychology is very weak than you are, because you're not able to create your own plan and knowing when to take profit. You understand?
I feel you on that. So my biggest thing, I had a loss that was at the beginning of the month of October, and not to say my strategy didn't work. Everything worked. Everything planned out exactly. I stuck to my strategy, stuck to it to the T. The only thing I did, and you have up there, is I over leveraged. I over leveraged the account. I had a position of a 4 lot on a 6K account, and XRP ate me alive. So I lost 4K off that. So that 4K was like a punch in the face. But mind you, I won the last 35 trades without any losses. So I'm I got too confident, and I was like, man, forget it. It's going to turn around. Everything happened the way it was supposed to, but it spiked. and I got caught up, and then next you know, I was 100 pips on a 4 line, and I was done.
Yeah,
Line.
I'll tell you something, okay? Something that I learned, but the hard way. Okay, so before become successful, I lost over $5,000 easy in the markets. Plus Q's mentorship 5-day course that was 2K, plus my first Mac that was 1,200. Blah blah blah. I lost so much money before become successful. You don't know, okay? But I'll tell you something. You're not supposed to blow an account, okay? If you blow an account, it means because your psychology is weak. Okay, work on working your plan and knowing what to risk in the market. Okay, and if you blow an account, I tell you, you're weak. You're just weak. You're not supposed to blow accounts. And
yeah, he got struck out again.
And people,
it's cool.
Yeah, I see that. But brother, like what I think about, and this is just my opinion. I think like when you look on the lower time frame, that lower time frame, and I think like jumping in and out of trades a lot of time is like you playing a game of chicken with your broker, you know, and they're gonna win a lot of times.
I mean,
I had another question as far as in scalping as well, but can't you look at the overall bigger picture on a higher time frame, then break it down to a lower time frame to actually scalp instead of waiting? Because I know I struggle with patience myself, so I'm better at getting in and out the market, but I am getting gradually better with holding my trades for more days at a time. But like I was saying, like, you know, going on a higher time frame, find your setup based off the higher time frame and just scalp the higher time frame. Basically, you're on the lower time frame, but your analysis is based off the higher time frame.
Just give me a second.
Yeah, okay, so I get what you're saying, and I know he just stepped away real quick, but when he comes back, we'll cover it again. But
it's just that what you see on the higher time frame sometimes takes so long to happen. It might be the total opposite happening on the lower time frame than what you see on the bigger time frame.
If it's on a big time frame, man, like if you want to go long, low lots, like period, like you don't have to have a big position size to make a whole bunch of money off a daily time frame. You can have like a 0.50, and that 0.50 can turn into $400 or $500 like in a day or two. But if you like quick money like I do, use volatile pairs like GJ, GU, gold, oil. If you're trying to make money quick, those are the ones.
Yeah,
like, that you want to make money fast.
And when you're scalping, it makes you want to use a bigger lot because you're collecting small amount of pips.
Exactly.
Correct.
You don't have to use standards.
Okay, guys, look. Okay, I mostly trade only gold because became very fluid with fundamentals. I started really like understand fundamentals very clear, and gold is a lot of fundamentals, and the gold has a lot of pip wise where you can get easy. Okay, so I choose the trades, my past trades, like past 2 weeks, and I want to go over them with you. Okay, on why I took those trades. Simple. Okay, so let's look at this one. Okay, let's start with this one. Okay, it's right there. This 1513 is right there. Okay, let's go.
I can tell you right there from that setup, it was already broken on a 15, and I can see it. It was already broken on a 15. They started doing lower lows.
Look to the left. Exhausted. We have your zone. Exhausted. What's going to happen here? It's not going to break. There's more chances of bouncing from that zone than breaking it. In order to break that zone, it needs a lot of liquidity. And if you look at the time, okay, you gotta look the time also, like London session, New York session, where the liquidity comes in, and you'll see that Asian session will create that bottom wick, and London will come, that candle will start forming bullish slowly, and then London, New York will come, boom, this candle became bullish and goes further. Asian session creates that bottom wick, London, New York freaking sometimes breaks all those zones and goes to the moon. Okay, so you got to understand how the wicks forming, how the candles forming is the most important part. Okay, so look,
you trade like a market maker. So market makers, they only trade in ranges like you're doing right now, because the way that they trade is I want to make money in both directions. I don't want to just make money just in one. So they only hop in the market when they know they can make money in both directions. Other than that, they stay out.
Okay. Something that I learned is I trade like an institution, okay? Like a banking institution, okay? Okay, retail traders, they trade support and resistance. So support here, or resistance here, or support here, resistance here, support here. I trade like a bank institution. Bank institution, they trade supply and demand. They trade those big zones.
All day long.
All day long, man. And that's where I get my high probability trades. I want to trade in the middle. I don't care. Sometimes, yes, I can scalp from here to here. But what's the chances that from here it's going to back down here? So that's why I have a 30 pips, always 30 pips, man. Okay. Anywhere where I get my trades, 30 pips, man. 30 pips. 30 pips, my first take profit, man. I don't care. That's what makes me money all day long, man. Okay.
Bro, I wanted to ask you a question on gold. So like, from me, like looking at gold, and I always notice that whenever gold goes up, like because what happens, I look at the dollar index, and it seems as if the dollar index goes up, gold goes down, or if the dollar index goes down, gold goes up. Is that the
All
same
the
thing
time.
that you
Yes,
observe?
that's correct. It
I'll
does.
explain you why now. Okay. So
Wait. Repeat that one more time. My bad.
When the
I'll
dollar,
repeat
yeah,
it for
go
you.
ahead and tell me.
I'll explain you. It's very simple. Okay. When gold goes up, the dollar depreciates. The dollar loses value because gold is going up. So all those big Wall Street boys, man, they buy gold and dollar lose value. Okay, because they're buying gold and dollar losing value. So DXY, the index losing value, it's going down, right? The dollar losing value, it's basic. So when the dollar is going down, well, when the gold is going down, well, the dollar will go up. Why? Because gold is a safe haven. So the safe haven losing money, losing the value, and the dollar gaining strength. Make sense?
So it's basically
Yeah.
how I look at US 30. So when I see that, US 30 is doing something, I know that potentially gold is going to be doing the opposite of whatever US 30 is doing.
Exactly. Because me as an investor, I either invest in gold or I invest in US 30. You understand?
Okay.
It's either I invest in gold or S&P 500. Okay. It's either I have gold or I have cash USD. Do you understand?
Yes, sir.
You cannot
Yeah.
have both. You cannot have both ways. Okay. So that's why, look. So this trade zone, look, I had my zones here. Look, I have my resistance zones here. And look, the exhaustion, man, it came up, created a big wick. Look, the next candle. I look on then I go on the lower time. So that's where I'll start to use my lower time frames, man. Simple.
Take it from somebody who's done what you guys have done. I got a little bit longer experience, but I did the same thing like he was saying where, they move in opposites, treat each individual pair individual. Yeah, they move in opposite directions, cool. But sometimes the market can just sit there and ignore that and be like, okay, I understand we move in opposite, and it can do something way totally crazy from your analysis. Be like, oh yeah, the dollar went up, gold's gonna go down. Sometimes it may not happen as quick.
Sometimes majority of the times it does, but sometimes you're right, because I've seen it before where gold is going up and the dollar is going up at the same time. It all
I had to change how I thought about that because I had to learn the hard way that it's not always going to be correlating to that.
Not always. So that's why I never look at that.
Same way that I used to correlate US 30 and NOS 100. They used to look just alike, but then it changed.
And bro, that's why you have to examine each chart in its own merits. Because if it was that easy, you could literally go the opposite at all time.
Everybody be a millionaire.
Yep, exactly. So I don't look at DXY or US 30 or S&P 500, where is that or how it's moving. I just have my zone smart and I trust my own analysis, okay? And I trade from the zones. Look, okay? Look, zone, sell. There's more chances of bouncing than breaking it, okay? Then I send to my friend, let's look at this one, okay? This is a scalp, okay? I entered 3 lot. I got my 30 pips. I have my runner, stop loss and profit, and then I got stopped. Okay, sure. But look, my cells, they're ready. They're ready for 30 pips, man. They're hungry to come here, come back down and eat. Okay. And then I had my runner until here and then I closed. Okay. But look, if we go back here, look where I took my trades. I literally took it here. Why I took it here? In my zone. Once again, it's in my zone. And look, we tried to break once. We're creating liquidity grab. Then look, okay, trend line, man, trend line.
Yo, it respects that trend line like no tomorrow. Like it's on every pair. If you have a daily trend line, like daily trend line, it will respect it. Or even a H4, it's gonna respect it really hard. Anything below that, market don't give a care. It'll just blow right through.
Q's is very good in M15s, and sometimes M15 they respect it, but there's more chances of breaking those trend lines than respecting it. But yeah, Q is good at with his trend line time frames.
Now check this out. So there is an indicator out there, and I trade, and it's a 3-in-1 indicator. Very rare. I don't trade like Q does. Q trades really good. Don't get me wrong. I developed my style, by mixing and however you want to say it together, and that's how I came up with my style. There's an indicator out there that actually predicts when the market is overbought and oversold, and has the volatility and is pushed to one area. So the market gets pushed to one area, just like how your zone is. It consolidates and goes sideways for a little, then it makes a big drop. And it's every single time. So like that one at the top, the one you just said, you just took that entry at 15.12. That second one, it goes sideways and then it drops. So as it hit that, and it does it a lot, more often than what you think. But you can see it happen all the time, and that's how I get all my trades in. Like the RSI is good; it's a good tool, but there's better tools out there. Or even the ADX, there's a good tool, but there are better, tools out there. So explore.
Just
what
look at
indicator
this.
are you talking about that's a 3-in-1?
Just look at this, okay? How many times we're going to bounce from the zones?
A lot, man.
A lot, man. A lot.
And sometimes it creates in like M and W's.
Yeah, a lot, right? So there's more chances that we're going to bounce than breaking it. So that's why I sell at resistance and buy at support, man. Okay, always. It makes you more profitable along the way, man. Okay, look. So this is one of them. Okay, where I buy again at the zone. Look at this one. 1480. It's right here, man. 1480. This was one of the strongest zone. Look how many times we bounced. Once, twice, 3 times. And this was the FOMC. Okay. We bounced back, man. We went up because we rated the cuts. It's not good for the currency. The news came as expected. Gold fell down, grabbed liquidity, and it went straight up because it's not good for the currency. We're cutting rates, man. Federal rates, man. And if you backtest, literally, that's what I do. Backtest, man. If you look at the last rate cuts that we did, this was the like 2 weeks ago. Look what happened. Again, we dropped, and look what happened after. We went bullish, man. So what happened here? We dropped, and we went straight bullish. Look, buy. Simple, okay? Simple, man. Okay, let's now talk about the price action.
So, okay, I don't mean to throw your
On
style
why
up,
I entered another lot here. Why I entered literally like another lot, 2 lots here. Okay, and this one I didn't go for 30 pips. I went literally for 100 pips, and this was one of my biggest days because I was trusting my analysis and I was knowing I was going over 300 pips for that trade. Okay, but why? Simple, man. Because of the rate cuts, and it did exactly as it did last time. We cut the rates. The news came as expected. We dropped, grabbed liquidity, and we went straight to the moon. Same thing here. We cut the rates. The news came as expected. I grabbed that liquidity, that best entry, okay, that I could have, okay, and exactly at my zone, my strong zone, okay, where we bounced a lot, and we went straight bullish. and I took my profit at 1508 right here. I didn't go too further. I think this was plenty for me. It was a good day. But why I took another entry here, it's simple, okay?
Quick.
There you go.
Okay, there you go. Yeah, just to break it down, like real quick on how I trade quarter points, and that's excellent.
Hello?
Like he had his biggest day
Hello?
on
Hello? Everyone can hear me?
Yes,
yeah,
sir.
we hear you.
Yeah. I can hear you.
No, quarter points is like the biggest thing. Like, okay,
Hello?
I can explain the quarter points like this.
I,
You know when you go to
I think I don't know what's going on.
Hello?
We can hear
Yeah,
you.
yeah, we can hear you, bro. Go ahead.
with you want me to continue with the quarter points?
Yeah, go ahead, because I think he's still messed up.
Okay, I'm here. Okay?
Okay, yeah, he's back.
Okay, you hear me?
Yeah.
So
Yeah,
let's talk more about price action now, okay? How the candles form, how they create, and how they finish,
He
okay?
froze again.
He froze again. Dang.
Yeah, can you see?
I think it's because he's probably like where he's located.
Bro,
No,
I
but
live in Canada,
you
but
ever know when you go to like the gas station or like
hello? Hello?
$99 or it's either like buy a pack of gum, it's like $150 or $160.
I think he's back now.
Yeah, I'm back. Sorry guys, my internet. Okay, I'm calling the provider tomorrow. I don't care, man. This has been happening for like past 3 days. It's getting annoying. Okay.
As a trader, you need it.
Yeah, bro. Like I got good setup. Now it's internet that's been really bad for past 3 days. Okay. So now that we talked about the technical analysis where I trade from zone to zone, like an institution and banks. Now I want to talk about more price action. So everyone can hear me now?
Yes, sir.
Yeah.
Why I took another entry here is simple. Okay.
It's a quarter point.
Simple.
I already see it. This is quarter point. It's landing right on it.
This candle closed bullish, right? I had an entry here, right? I had an entry here, okay? This candle closed bullish and it did engulf the previous candle, okay? And if we zoom into this bullish candle, we have no wick on top. So we literally broke this strong purple zone on lower time frames, right?
Quarter point.
Look.
It's a major quarter point. There was a book developed by a banker that said quarter point theory.
Exactly. Look, break, retest. You have another one here. Look, all my lines are and I had another entry. Look, let's look at the entry. 1495. 1495. Like somewhere here.
Oh, I'm starting to get what you're talking about the
Bro,
quarter point.
I think when the candle closed that strongly too indicates there's not a lot of people taking profits.
Not just profits, but it means that the big boys they come and play. They're going on. That's
the
what
big boys had already got in. So
big boys they're coming in and they're there, man. They came in here. They came in here like me. They came in the best prices, you know.
Yeah.
And don't forget, okay, this daily, okay, closed bullish, engulfed this one. What happens? Like this is a theory that I like. If this one closed bullish, daily closed bullish, there's a big chance that next one will close bullish.
Damn, he's like freezing up a lot.
Okay, so if this candle closed bullish, there's a big chance that this
Hold
one,
up there.
Where is he located?
Canada.
Hey, with that book,
So, like I was saying, like even if you buy like a pair of Jordans, is it's either at 100 or something like that, or like $50 or something. You're like, oh well, how much is it for a ticket? Oh, the ticket starts at $9.99. I'm like, so why don't you just put it at 100? So the market moves the same way. Or it's like, oh well, how much is my meal? Oh, it's gonna be like $25 or something like that. So like if he did horizontal lines where I'm
Hey
telling
brother,
you,
I think
you'll catch it.
You back? I think you see it's moving,
Yeah,
right?
I'm back. So let me talk the price action, why I entered here, okay? So literally, the daily candle closed bullish, and I know that the next daily candle will create bottom wick, okay? So the candle opened here. It created the bottom wick, and lower time frames started to show me, okay, there's support here. So it's break, retest. We have a bullish variation, okay, on 30 minutes. Something like this. Then I have my 200 EMA that becomes like, we had resistance here, we broke it, becomes support. After this bullish candle, yo man, I was buying, man. Even this, so it's like a double bottom, man. Double bottom, and I bought it here, and it created this bottom wick. No, I bought it. Yeah, I bought it here. Yeah, 14.95. I'm right. So I bought it here, and this literally, like this, literally, okay, was Asian session that created the bottom wick before London continues going further up and New York becoming the most highest liquidity session that everyone should know by now. Okay.
Canada is a cold place.
Yeah.
Yeah.
Asian session created
Yeah,
bottom.
man. I think I already added you. Was it Danielle? I think it was.
Hello?
Helps a lot, and supply and demand zone helps a lot because it's range trading, and that's where a lot of the big boys
I
play.
wanna see how you draw your like supply and demand zones. Like, what do you look at when you're drawing them? Because how do you say it exactly, bro? In Mary love, in Mary, I don't know.
Your Milov.
Back.
Okay, yeah. I want to see what you look at when you draw your supply and demand zones after you finish with the price action thing.
Okay, let's go. So did you understood the price action?
I mean, I got it. I don't know if everybody else got it.
I saw what you said.
Like
Yeah.
the daily closed bullish engulf. Asian came in, created the bottom wick, okay, starting to turn slowly bullish, okay, and started to go bullish. And London, New York came and it fly over because the previous was bullish, so bullish, man. Investors went long. Plus, we had a big rejection on H1, H4, so 100% sure we went bullish. Okay. So you want to know how I draw zones?
Yeah, the supply and demand zones. Like, what do you look at exactly when you're drawing them?
I'll do that. Easy and simple. Okay. Something what I love to do is this. Okay. I don't care, man. I draw like it's became an art. I draw, man. You literally do that all the time and become good at your technicals, knowing where your big zones, big reversals, blah, blah, blah. Okay. So I've done this with my good friend Harry, and I think he really understood and it became simple. Okay. So let's do daily because I don't want to go like on higher time frames like quickly. So let's go daily. Okay. Look, all this rejection here. Okay. Rejection. Okay. So this is going to be like median, right? Median, like Q calls, median. Okay, where we had kind of support, we broke, then we had support, then we broke, resistance, we broke, okay? Then you see break, retest, drop, okay? Daily level. Make sense?
Yeah.
So literally, if this one was bullish, not enough volume on the daily candle, so basically it was break, retest, now we're dropping, okay? Okay, let's do the zones. Look, there's another one. Look at this week. Look the market where it came. You have another one right here. Okay, look at this week. Look at where market came. So you had another one right here.
Another
Okay.
quarter point up there. That's where I got in before.
Yeah, exactly. That's how you mark your zones, okay? So look, you have one right here, then you have support here, then you have big rejection here. Okay.
And he become a snowman again.
No, but you can see it. I like how he does it, but he does his range really good.
I don't like to trade here in the middle. I will take scalps, okay, sure, for fun with friends, But my biggest trades, I take high probability trades, okay. I don't like trading within the range,
Market always retests wicks.
Okay.
Always retest wicks.
Look here. Look, this is, you see wicks here, okay? Just do this. Okay. Then market found some kind of higher low here. Adjust, you gotta adjust to the market, okay?
Okay, I got a question for you. So do you trade NFP? Because I do.
Oh, yeah, bro. I caught NFP sells last week.
Yeah, I'm a monster at NFP. Like, NFP is really predictable.
Well, no, it's not very predictable. I would say it's the last, the trade is the most hardest to predict, okay? NFP here, okay? And what I do is this, okay? I look at past data, okay? That's something I love to do, okay? So this was for November. Let's look November. November came positive. Oh, okay, look, it came positive this November. Cool, man. November. Okay, this came negative, okay? So you have like 1-to-1. Let's look November, negative, okay. Now, this is the first thing I do. The second thing I do is this here, man. Is reading what's happening in the economy, okay? US dollar remains on the defensive ahead of jobs report, okay? The employment situation, okay? This looks interesting. Then you click on it and you go read, man. You go read. Okay, this is November 1st. I think it's came out, okay. This is November 1st, so it came out just after NFP. So let's look more than 31st of October. GM's track to impact US employment report. Can the US NFP impact markets? No, we don't need that. NFP period. Did Powell just steal the jobs report under? The jobs are out on Friday, but there is another report. Okay, I think this one will be interesting. Okay. Read, man. Read what's happening. ESM manufacturing data is expected to show a contraction in activity in October. For a third month in a row, manufacturing has been at the heart of the economies. Just go read, man. If you want to become good at fundamentals, go take a read and try to understand what's happening. Should it be good or worse? Okay, that's how you will be good at news and trading the news. Okay, and if we go to this point, this was NFP right here. Okay, NFP came as expected. We weren't ready to drop. Okay, mark your zone. Okay, you can do the zones on lower time frames too, man. So look, simple, man, pretty simple. I don't know why I didn't cut the sells. I actually had a losing trade. This was my only losing trade. Okay. You literally have a double top. Do those lines and you will understand. Okay, we broke. Retest of the zone, we dropped. Make sense?
Yeah. Bro, like, so for example, on that Saudi Arabian oil facility attack, like when you see, like, for example, like an impulsive move like that happen, would you get in on the sell, under retracement? Because I mean, the market is going to correct itself.
I didn't trade that because I didn't know what's going to happen after that. So what happened? So, okay, there's drones that attacked Saudi Arabia oil facility. Okay, so there were a big explosion, obviously. So it made the oil price jump so high. But people say, "Oh my God, there's bombs." But how bad was it? Okay. How bad was it? Is the oil facility will be backed up for next week? in 2 days, 3 days, or it's completely down. Because if it's completely down, the price will rise up, will roll so fast. But no, you start to read news, okay? And I start to read news and I saw, okay, literally the news told me that the oil facility will be backed up in 1 week, less than 1 week, because the oil has to still run, right? So the rise rose so up, okay? And the price was overpriced. The price was literally overpriced. And if we look once again, higher time frames, we literally in bearish momentum, we're still bearish, pull back, bearish. Now we're trying to pull back, bearish. Then this happened. We're still bearish, man. Overall, we're still bearish and we're trying to break the zone. Will it happen? No. Okay. So I waited until the strong zone. I saw this 1, 2, 3, 4. Okay, I'll take a buy here, man. There's more chances that it will bounce back because then it will break. And if you start to read price action, you will understand that October, November, December, oil is always bullish.
But for example, bro, like when it came to the apex of what it looks like a symmetrical triangle right there, would you buy it on that line, or would you wait till it break above that trend line to go in that trade?
You mean buy over here? Where?
No, in the middle of the triangle, where where it comes to like to the end, like
here.
No, go down. Look where price was. Yeah, go over to your right in that triangle. Yeah. Would you wait till it go above that line there, to that trend line? Would you wait till it come on top of that one? Yeah. Would you wait till it come right there on top before you enter?
Yeah. This could be.
I would.
Definitely. This could be another opportunity. Okay.
Because I mean, if you bought it from that trend line, it's gonna come up in a resistance soon after.
Okay. Look at this.
I got hit with something like that before. I've seen a trend line like that. So I would wait till it exits, because there was one time it went down, it hit the bottom of the trend line, went past it, and then went all the way up and broke the other direction. So in that situation, that's like really tricky.
Okay. So this was the news. The price rose to $63 per barrel. Okay. Overpriced. Price had to come back down. Okay. Because overall we was still bearish. But we found this weekly support again, okay? But now we broke the trend line. 1 touch, 2 touch, 3 touch. Now it's a real break of trend line. Now we have a good retest of this trend line. Now we have a zone here, right? Look, 1 touch, 2 touch, 3 touch, 4 touch, 5th touch. We tried to break, wasn't ready yet. Now we're slowly breaking it. Now we literally broke the trend line. This is a real retest. That's where you should start looking on lower time frames for some kind of bullish variation. And let's do it. Let's do it just for fun. Like Q does, you know, he marks up this and then he breaks it down on lower time frames. Once you see this on higher time frames, okay, sure, take this, man. Break retest. Okay, bullish 15 minute, 30 minute. Bullish engulfing, bam, your entry should be 1 here. Break, retest, you have another bullish engulfing, okay? You have a variation, bullish, okay? Why wouldn't you start taking entry slowly here, you know? Like, it's so simple, you know? Again, 1 break, retest, and now we're breaking another zone, look. Like literally, there's 3 zones that I just marked that you could have entry. Entry here, entry here, entry here. This broke, entry here. And look, this is literally like rose up so fast. Like there's so many pips. This is 100 pip move, man. Easy.
Talk about instant profit.
Instant profit. But I have my plan and I respect my plan. And I showed you earlier, 30 pips, man. I don't care if I see there's opportunity of 100 pips. I don't care anymore. I have no emotions. My plan is 30 pips. I take my profits at 30 pips, between 30 and 40 pips. Okay?
That's pretty good, because that's where I look to. And that's, again, I know I refer to it a lot as quarter points, man, because the market moves in quarter points. And that's actually excellent to take it at that point. It can go further. It can go much further than that, but don't get greedy. Like,
exactly.
People get too greedy on the charts.
Yeah, look, Look, we go on H4, man. Literally on H4, you have a bullish engulfing. You have all this rejection. Okay, then you have this is you need to, like I said, 3 to 4 trades per week and take only high probability trades when this shit happens. Not when you're here or here. No. When this kind of things happens, when you see clear vision.